Good morning, ladies and gentlemen. Oh wow, as the title is already suggesting, this market definitely makes you want to quit. And let me tell you why. Because the market makers are hunting, and the market makers are being ferocious, and the market makers are taking absolutely zero hostages at this point. So what's happening? Bitcoin has been selling off pretty much in a straight line since 74k. And the thing is, to be honest, there were signs. There were signs that this was gonna happen. There were signs that this was coming. And let me explain to you why there were these signs. First off, these candles might have been the clearest Tao signs we ever could have gotten. Before I get into this, good morning everyone. How are you guys doing? And I see, it's just me. I see someone saying if it was up 2.5 million, I would quit as well. Well, it's 2,679,000 at this point, and there's already 309,000 realized. So that means that this position is a good, about 3 million profit. What can I say? So the clearest sign was, and it's a level I marked off previously, right? And this level that I marked off for me was the bullish bearish flip level in white. I talked about it on Discord. I talked about it in the live streams. I pretty much broadcasted it absolutely freaking everywhere. And why does this level mean so much? Well, it was the previous hold level of the bull market. And not just that, it showed us that we broke out from the structure towards the highs, which is the 82.2, also neatly marked off. And as long as we were above this structure, we were forming something bullish. We were forming something interesting. We were forming something that could have gone higher easily. But as we all know, it didn't. So there's that. Let me check what's happening here with Bitcoin. Oh, but he's going for it to the upside. That's nice. Think Bitcoin is not ready for a lot of relief yet. But okay. So this level was crucial. They went below it. After going below, they immediately pressured it up. This was one of the biggest Tao signs we ever could have had in order for us to know that this wasn't going to end pretty. We had 800 million liquidations in the weekend. We done below, we tried to pressure up again, and from here it's basically almost straight down. And this move by itself is also pretty much where we went into our swing short. This move by itself is already 17%. And I'm not gonna lie, guys, and I'm gonna be completely honest with you guys here. We're not done. We're not done. Listen, I marked off my short from 82 with a bottom of 44 and 40k. And I genuinely think that this is where we're heading. And people that don't believe me, well, you don't have to. But I got quite a lot of results speaking for me. So yeah. So what's Bitcoin currently doing? Let's dive into where we're at, what I'm seeing, where we're heading, and the reasoning behind it. So during the night, Bitcoin yet again made a new low. So that means that now currently every session is in an agreement, right? So Asia down, London down, New York will probably go down as well. And even yesterday, for the first time in a long time, we've seen the stock markets turning red as well, which is even a bigger catalyst in order for Bitcoin to keep on pressuring down as well. I'm gonna be completely honest, guys, it's looking bleach. The money flow is retail is pressuring down, the mid-size is pressuring down, the whales is pressuring down. On the hourly, on the 4 hours, the whales are the only things that are trying to keep it up, and on the 24-hour, everything has downwards pressure. There's no influx. They're not letting go as of yet. It's it's just not looking great. And I think this market has the capability of going even lower. And yes, my target still remains the mid 40s, 48 to 42. 65k by tomorrow. Listen, buddy, normally I would call you crazy, but at this stage, at this ferociousness, with the current influx still of people remaining too long, and let me show you the liquidations. Last hour we again almost took 60 million and 1.5 billion the last 24 hours. Everyone is longing. The same would happen in the upwards momentum, right? Where we could see everyone still aping into shorts. Everyone is still aping into longs. And as long as everyone keeps longing and everyone keeps aping in, why would they stop? They're eating, they're feasting. But the one thing that changed is Saylor is not buying right now. And Saylor all of a sudden is 11.5 billion underwater. That's not good. That's pressure. That's very bad. As of now, what I see is there's quite a big gap. And this gap worries me. This gap goes from 63 to 60.3. And I can explain you why I see this gap. If I look at my dwell blocks and my dwell time, the market hasn't spent much time in this range, right? If I historically look here, there might be another level at... let me check it. Where did the music go? Hello? This is pretty reachable. This is the only... Oh man, we're back far. 124. It is holding some confluence, but it's hard to find a level in here because of the wick structures. This I can 100% see because it lines up here. Might be something going on here because of this bottom formation, but it doesn't have enough conviction for me. This is the mid-range. I told you it to be gray, right? It's the same color gray? No. Also not the same color. Sorry, my autism is taking over at this point. This is the only thing that still has confluence. And could potentially save Bitcoin for falling below 60k. Literally the only thing. And it has been tapped already. If Bitcoin doesn't start pulling up from here pretty fast, we're gonna be in trouble. The only long I'm interested in right now is laddering two ways. I would take these two DCAs. But listen, all my longs that I'm taking right now are... So let me explain first why I even consider taking a long. And my longs are not the size of my short right now. Why? Because the market has shown me and proven to me that their direction is down. And I never fight the trend. If the trend is down, the trend is your friend. Very, very, very easy. So I take longs. Why? To scalp in between. And to not give back all the profits on the short. Mentally, especially right now, where I'm up 2.8, 2.9 million, it becomes pretty hard not to touch any buttons, right? So if I have a long that is in profit as well, or slightly down, I don't care. I just make less profits on my short. This keeps me sane. This keeps my head sane. This keeps my mind sane. This makes sure that I can keep on doing what I'm doing, and that is holding to 48k. Why? Because I can zoom out. So if I lose 100k or 200k or 300k on some random longs, I don't care. Because it's protecting my current positioning. And it's protecting my profits on the short. Especially in a market where it's ferocious, it's hard, and it's incredibly volatile to trade, even though the direction keeps on showing down. And let's be honest here, everyone keeps on aping in. Look, there's new longs opening here. There's new liquidations forming under the price point. It's insane. People keep going into this market. So for me, honestly, it's just a matter of time before it's gonna take it. Everything is going down bad. Everything is already down bad. If New York is gonna open bleach yet again today, man, with that we're in for a treat. So, what are you guys trading? What's happening? What are we seeing? What are we doing? Talk to me here, guys. As long as we hold this line here, there might be a slight bit of hopium, but it's... I don't know, I've seen better. Not gonna lie. I've actually seen better. Chento, friend. Hello, Selma. How are you, buddy? How's it going? Possible entry for down. Listen, it's very, very hard to get in a new short right now. And that's something they do deliberately. They pressure it slightly. Let me see if I can find something for you that is reasonable. The only key levels of retest are now the 65.2 and the 60. Thing is, we had a flip level and it was a mid-range that they broke completely through. Look at it, it's the same pattern every time, right? It's exponential move down, retest, grinding, lower highs. So if you ask me about this one, I think it's gonna do this back into an exponential move to here. I think this is the plan for today. On that logic, the potential entry for a short would be, if you're lucky, 63.8. But it's tricky. Why? Because it's a Thursday. And by the principle of midweek reversal, Thursday is the only day where the market could potentially reverse and start looking for higher or for retracement. So what about altcoins? Buddy, I don't trade altcoins. Why? My sizes are too big, my port is too big, and everyone got wrecked by altcoins, and I refuse to get people wrecked. I'm a trader, right? And my trading style is Bitcoin, and I trade Bitcoin only, and I'm very, very good at Bitcoin. So that's why I specialize in it. So for me, anything else has no added value. Literally no added value. What's your top entry for Sui? I don't know. I don't touch Sui. Putting some short last night and some altcoins, waking up to trade TPs of 50%. That's juicy, man. That's insanely juicy. Congratulations. So for me, I think the plan for today is 60.3. Genuinely. It's a 10k challenge starting soon. Yeah, could have finished it already by now, but I've been busy. I think 60.3 is a realistic target. It's 4.2% more down. I don't see any reason why the market couldn't do it. Let me screenshot this. Send it off to where it belongs, the inner circle. For the people that don't know, if you want to trade with me, you can join our free Discord. The link is attached below. And next to our free Discord, we have an inner circle. If you're trading with more than 50k capital and you want to have more personal attention, it's a WhatsApp group. Make sure to add me in the Discord and send me a DM and I can send you more information. And again, I make my money trading. So I don't ask for any money. Everything is free. It's yeah, it's fun. It's good fun. We've been printing. I think everyone has been doing insanely well within the inner circle. Everyone is making money. Also in the Discord. And again, yeah. Any trade running? Yeah. I got pretty decent short. You can also see it on X. It's up 2.6 million right now. So I'd say that's, yeah. 60.3, what's the reason for that? Okay, let me explain where that my level comes from, right? So what I do is I look at dwell time. And dwell time means that I look at how much time has price spent in an XY region. Let me clean up some of these right here that don't have a lot of bearing right now. What has been directly dumped through? This one has been dumped through. This one only tested once. Like this is a bit cluttery. Yeah, just are a lot of levels in this region. What can I say? So I look at the historic value, right? As you can see, especially prices around here, the market just has spent a shit ton of time in this region, man. Honestly, a lot of time in this region. So everything I look for and everything I look at is based on where has the market historically spent a lot of time. Now, as you can see, these levels originate from even way older. So what I do is I check where has the market spent most time. And that is also the level where the likelihood of bouncing is the highest. Because we've spent a lot of time around these regions, and I always take either a midpoint, something with a lot of wicks, or something that has some volume, right? So what I explained yesterday as well. For me, drawing a trend line makes no sense. Why would I draw a trend line? Because a market accumulates vertically. A market builds volume and builds money at a horizontal level, not at a vertical. Sorry. That's why, for me, it's more support and resistance, with the explanation of time spent as a confirmation instead of anything else. It just doesn't make sense. It's that easy. It doesn't make sense. So let me check here. This will have bearing for me. This held it slightly. This should hold. This one got ignored. I have to clean up some of my clutter. That's a mid-range. This is the mid-range. I will keep that. This is the mid-range. We dump through here. We have quite a big hole here. And then after that, it's off to the races. So for me, the plan now is I want to see a slight retest of the potential high and see if we can try at least to regain to the bottom of the structure that they've been forming here. Thanks for being live, Chento. Much appreciated. 58k. Bro, I think we're going lower. If we don't get a retest of at least 63.5 or ideally 63.8, it's hell and beyond, guys. It's absolutely hell and beyond. It's not looking good across the board. Liquidity is stacking below yet again, even on the 30-second time frame. I don't like the way that they're forming the candles. They can't do anything. It's immediate retracement at the heights. It's honestly, it's looking like it's gonna dump even more. Looks like it's gonna retrace below. You can see the influx. There's instant liquidations happening. And right now, with the pressure that we're having to the downside, everything that is short is... Listen, the liquidity just doesn't get absorbed as it should be in terms of liquidations right now. And that is what makes this so dangerous. The danger of this is that they're actually willing to liquidate to an extreme in terms of absorption. As you can see how bearish the money flow is during a London session. There's more than 700 or 800 million pressure downwards. Momentum is down. It's like roller skating downhill without experience. It's the only way to stop it if it hits a car or a traffic sign or just absolutely breaks its face. But the problem is that everyone keeps longing it. So why would they stop pressuring it? Look at how much liquidations they're actually taking. It might even be that the last week is in the top 10 of liquidations. Liquidation event. Long, short. 21, 21. I think 26 should be in here. What we've seen a couple days back. It's not update yet. Oh, 26. The 31st of January is already here. And I think the current volume that we've seen in the beginning of the day, of the week, should be pretty close to being... it doesn't matter anyways. All I can say is that the pressure is down, the volume is looking down, the market is looking bleach, everything is dangerous. So for me, honestly, protect your capital. Mark off lower zones. Make sure that you keep your... If you're not in a short, try to look for entries for short and make sure that the short is dominant over the long. But I can advise to hedge, right? The best time to hunt for dwell blocks is on the 4-hour time frame. Don't hunt for any dwell blocks lower than the 4-hour because it will not have enough bearing. 4-hour to the daily is the time frame where you look for dwell blocks. Do you see the liquidations at the high? Like I said a couple of minutes ago, and they're immediately pressuring down again below the dwell block line, and it's... I think they're gonna push below the previous low because that's what they always do. And if we're lucky, we get a bounce at 62.3. That's why I think we're heading from here if we don't pull up now, because this order cluster here is the last thing that's keeping it up. Market is bleeding so hard that if this is not the bottom... Listen, bottoms don't get formed immediately, right? For the people that have been around long, if you look at FTX, if you look at everything that this market has already been through, this is not bottoming. A bottom is not formed overnight. A bottom takes time. People accumulate again, people get in again, etc, etc. This time might be different because I don't think this market is going to give a very long time to get generational freaking entries. But still, it's not a flip of a switch, right? It's not, oh, today we're dumping, everything is going to shit, and then tomorrow it's all positive. That's not how it works. That's not how the market works. That's not how accumulation works. There has to be a fundamental change, and I don't see it coming yet. The thing is, the stock market is still booming. As soon as the stock market rolls over and everyone can agree on the fact that this stock market is going to come down. We still have the war. Trump is not fixing it. We still have inflation. It's not getting fixed correctly either. It's not looking good. It's the truth. It's not looking good. So yes, this market can go a lot lower. I don't think the bottom is in yet. But as the bottom is in, that's where the real patience starts. And that's when it really becomes obnoxious. We've seen it before, right? We know how markets work. We know how cycles work. But a lot of people try to project where the market is going. But yeah. The daily RSI is as oversold as it gets. How can that indicate an imminent dead cat bounce at least? No. Why should it? Listen, everyone can look at the RSI, right? And what is better then just keep ignoring it. Oh man, here we go again. I don't care about RSI, neither does the market. RSI is one of the most lagging indicators it gives, right? So RSI can be oversold for weeks. If the market wants a direction, if the market wants down, it's... yeah. Happy hunting. Again, guys, if you want to trade with us, the free Discord link is below. Yeah. I don't need your money. I make my own money. But still, it's nice if you guys join us. The trend is your friend? Bro, the trend is probably your only friend. The current meta is money flow. Money flow tells you where the market is going. Nothing else is helping you. I'm telling you, it's 100% money flow based. Let's see if we have any news today. I don't really care too much about news either, to be honest. So in speaking, nothing noticeable. If we break through this trend that we're seeing right here, it's off to the races. Look at how big the moves are getting as well, right? This by itself here is a 0.7% move in the last 15 minutes. Problem with registration? I don't know. What's a good money flow indicator? It's we built a platform ourselves. It's called flowx.trade. It's free to use. I just sent the link here from my own account because I don't have access to the Banter account YouTube. Check it. It's the chart I have on the right that you guys can see. It's completely free. It has a coin scanner as well embedded that shows you what is bullish, what is bearish, what it is doing from all-time high, etc. Combined with the 5-second chart I use, I have the CVD on and I have the liquidation bubbles on. And I have the setting that I see every order across every exchange we monitor above 50k coming in and going out in spot and perps. And that combined with the money flow is how I establish my bias, right? You keep saying problem with registration, but I don't know how I should fix that problem, to be honest. I can't, basically. I'm live streaming. Come member gives this interaction fail. Yeah, you can tell me 18 times more, but I'm in the middle of a live stream here, buddy. Buddy, I'm new trying to understand. What are you trying to understand, bud? Talk to me. So what I look for is I want to see either big liquidations in a certain direction, like they've been doing here constantly. This would be a signal for me to buy as a scalp. Why? Because you can see an instant response from the CVD, which is the cumulative volume delta. Oh, it looks like they're holding at the bare minimum, the bare bottom. If they don't retrace this move, might hold for a bit. Can't promise for how long, but it might hold a bit. Platform, I mean. Can you share the money flow link? I just sent it in chat, but it's sent from Chento Trades. There it is. I just posted it in chat. It's flowx.trade. It's fairly easy to find. I just love it. As you can see that the pressure is still rising to the downside, even though this is a pretty nice recovery. Also in the 30 seconds, they've taken some of the liquidity, but I don't like the fact that the liquidity is building harder below here than it is building above. And I know that the long-short ratio is very much off balance right now. And I know and I bet that there's very much more shorts in the market than there's longs. But as long as the longs keep piling in, it doesn't necessarily mean that we have to act on it. And that's why MACD, RSI, etc. is build apps on blockchain, my bro. Bro, I don't have to do anything. I do whatever I want. And that is trade. I love trading. I love teaching. I love being here with you guys. That's why I do everything for free. What could be news that could change money flow? End of war. Yeah, but the thing is, everyone thinks that the end of the war is probably going to be bullish. I'm not too convinced, to be honest. The end of the war might just send us to the abyss even more. Does anyone use blockchain technology or is it just me with ICP? Bro, you chose the token and the coin that has the most abysmal chart I've ever seen in the world. There's no coin that went down more after launch than ICP, so congratulations. That's hilarious. I don't know why my earpiece keeps going out. But yeah, there's definitely news that can change money flow, right? But it doesn't necessarily mean that there's actually going to be acted towards money flow, or the market makes a choice, right? And the market chooses a direction, and that's a complex mechanism of market making, agreement between exchanges, and just the complete physiology and the complete setup of any market that has market making and order execution. I won't go completely in depth now. I'll do a separate stream on it, but it's not as easy as it seems. Markets are complex, algorithmic things. All we can do is try to understand what they're wanting to do and act upon it as good as we can. We're not going to change the market. And the markets rarely hunt us unless you're a complete degenerate gambler with 500 Bitcoin positions like me. I'm not a gambler, I'm a trader, but you get my point, right? So what we have to do is we have to find our sweet spot. We have to find our methodology of how we can position ourselves, and we have to understand what the market actually wants and where the market is going. And why I'm saying this is, I think that if we now get a peace deal with Iran, people will ape in long like there's no tomorrow. And if everyone apes into longs like there's no tomorrow, what is the likelihood of the market rewarding everyone that apes into longs? We've seen it with the start of the war in Iran as well, right? So everyone jumped into shorts. Why? Because it's bad. We're having a war. It's scary. It's dangerous. It's a war, guys. And the market rewarded us with a 25 to 30% pump. The billions of dollars worth of short liquidation stacked at the 70s. Yes. But the same amount of billions of dollars are also, well, below. Right now, the playing field is not that uneven. There's quite a bit of equality within the stacking of liquidity. And yes, I agree. But the irrationality of the move upwards towards 82K, keeping it there, compressing it there before dumping it back, the market makers are having a feasting frenzy. And for them right now to either liquidate shorts at 74K, listen, the market cannot just move to 74K in the blink of an eye, right? Because 74K from here is, even without the money in the world, and don't get me wrong, I'm not saying they can't, but it's pressure, huh? It's 19% upwards. And 19% move up, or they just pressure it down, I don't know, 6% or 13%. It's easier because the flow is already there. The money flow is there, the hypothesis is there, and the direction is there. And the directional liquidation that is already there without Saylor helping and without Saylor buying. What is easier? They can cut through it like a hot knife through butter, right? And spot keeps selling. The ETFs keep having an outflow. So everything is pointing towards it's easier to go down. And it's not always the most money cluttered methodology that gets chosen. Yes, the market hunts liquidity, but it has to be reachable. There's no way that the market makers right now, without Saylor, without influx in ETFs, and with an increased spot offering, not demand offering, they can't do it. It's a money game in the end, right? And that's what people need to understand. I think that too many people are trading without having a general understanding of how market making mechanisms work, how exchanges work, and how actual money flow is composed. Exactly, it's the path of least resistance. And that part of least resistance, trust me, they'll bank on it. There's other things playing, like regulations are coming into play. MiCA's coming to Europe. The enforcement. There need to be a lot of withdrawals, a lot of positions closed on exchanges. Listen, MiCA's going to enforce. The Netherlands is already getting emails. Listen, you have to take your funds off exchanges. Everyone has to close his positions. That means that the order book is getting thinner and thinner and thinner and thinner. 2bit is already starting. They enforced an email yesterday. You have to get your shit off exchanges. It's that simple, especially for Europeans. So the whole European market is slightly disappearing. For now. It's going to come back. MiCA is going to allow stuff. It's going to be, they'll fix it. But that's 800 million to 1.2 billion of money, non-leveraged, that is either up for grabs now, is redistributing, or not being circulated within the current market conditions. What do you think that has for an influence, right? On leverage, on average, that's 25 to 30 billion out of circulation for the next 30 to 60 days. You guys need to start understanding how that the market actually works. How that money flow works. How that... Yeah. That was my TED talk. Thank you. Saylor selling, even he knows. Bro, that's a comment that's... I don't know. Sure, but. MicroStrategy is the most dangerous thing that this market has ever seen. It's an absolute... It's disgusting. Someone with that spot supply in a regulated market. Unreal. Absolutely unreal. The market makers are eating lobster. Oh, bro, they're having lobster, caviar. They're having the whole nine. They're shooting their own buffet. It's... Money flow and market making is a lot more complex than people understand. Running exchanges is a lot more complicated. So the thing is, there's a couple of factors that play a role there, right? It's the rotation of money and the trust in an industry. So money is rotating from here into the stock market because the stock market dividends and the returns are way better currently. So the big boys and the big investors are choosing to risk off because we are in a war time. Wars are less risky assets. So we have the outflow there. You can also see it in the IBIT, which is the publicly traded BlackRock ETF. They're selling. Next to that, we have Saylor that is becoming a single-handed absolute danger to this market with his market position, who has struggles with paying dividends, which the market will react upon on. But Saylor selling a couple Bitcoin is not moving this market. But he is a spot pressure buyer. And his deal is that he gets filled above market. So as soon as Saylor announced, I'm going to start buying, the markets want to go up. Why? Because the market makers can make more money. He can pay a % premium. So if it's 66, he can pay 66.6. But if they ramp it up to 68, well, they can bank on it, especially with thousands of Bitcoins. 32 Bitcoin is not changing the market. It's the hypothesis of him having to sell for the dividends. And he is stressing for the market. Why? Because the guy owns too much supply. He's trying to create a single-handed monopoly in the rotation of Bitcoin. But the fact that he's not buying and the IBIT ETF is selling means that the complete spot offering is becoming bigger than it was. And while having a bigger spot offering, there's more rotation, there's less scarcity, there's more transactional volume. And with more transactional volume, with spot pressure, and remember guys, and I've said this before and I keep on repeating it, in the current algorithmic settings and the current market maker, spot is key. Spot CVD leads. Spot is the real move. Futures can only partially and within a given period of time manipulate the market into other direction that spot is pushing. So as long as spot is selling, as long as spot CVD is dropping, this market is not going to go up. And then on top of that, we have the geopolitical tensions. We have Uncle Donald tweeting left, right, center. We have oil. We have still a pending energy crisis globally with the Strait being closed. Don't forget that. So all of Europe is going to see insane stuff. Inflation rising, economy down the gutter, numbers not doing well. Every time a new Fed chair gets appointed, it's also not bueno for Bitcoin and for the stock markets. So, again, and I'm preaching to the choir, we're going lower. We might bounce a bit, yes. We might do some funny stuff, yes. We might liquidate up, yes. We're going lower. We've seen the bear market bounce. It was the bounce to 82K. From here on onwards, we're going lower. And that doesn't mean that we have to go straight lower from where we are right now, and that's 62.7. But I can tell you right here, right now, we're going lower. That clear for everyone? So my current setup is, I'm going to take a stab at longs at 61.8. And I'm going to take a stab at longs as a second DCA. And both of these will have a 30% size of my current short. So I'm going to take a stab at 61.8 and 60.35. I'm going to DCA 30% of the size and 30% of the size. So I will scale up to 60% of my size that I have in my short. Why am I doing this? My bias is set, my bias is fixed, my bias is down. And while remaining in a down bias, I want to protect my profits and not influence myself too much by having crazy waves. And what I mean with crazy waves is, well, it's, let me check the current status. I'm up 2,737,000 on my short. That mentally puts you through the mill because it moves. That's what I mean with, and to keep myself sane, to keep my position open, to make sure I'm not losing too much on funding. I'm hedging myself at strategic positions. If they work, they work and I take profit. If they don't work, I scale down again. Hit the like button on the way out. Thank you very much for tuning in today, and I catch you all very soon and hope that you guys learned something today. See you soon.